accounting basics. If you've ever wondered what debits and credits are or how financial statements work, stick around. First up, let's talk about double entry accounting. Imagine you buy a laptop for your studies. In accounting, this transaction is recorded using debits and credits. When you debit one account, you credit another. So, buying that laptop? You debit your asset account, equipment, and credit your cash account. Simple, right? Next, the accounting equation assets equals liabilities plus equity. Think of it like a balanced scale. Every time you record a transaction, the scale tips, but always balances out. For example, if you take out a loan to buy a car, your assets increase, but so do your liabilities. The equation always balances. Now, let's break down financial statements. There are three main types: the balance sheet, the income statement, and the cash flow statement. The balance sheet shows what you own and owe at a point in time. The income statement tells you how much money you've made or lost over a period. And the cash flow statement shows how cash moves in and out of your business. They're all interconnected and give you a full picture of your financial health. Let's get into some key terms: assets, liabilities, and equity. Assets are things you own, like cash, equipment, or real estate. Liabilities are what you owe, like loans or unpaid bills. Equity is the owner's stake in the business after all liabilities are paid. These elements work together to give you an idea of your financial position. Revenue and expenses. Revenue is the money you earn from your business activities, like sales or services. Expenses are the costs incurred to earn that revenue, like rent or salaries. The difference between the two, that's your profit or loss. Now let's touch on the accounting cycle. It's a series of steps from recording transactions to preparing financial statements. It includes journal entries, posting to the ledger, preparing a trial balance, and finally, making financial statements. This cycle ensures your financial records are accurate and up to date. All right, let's bring this to life with a practical example. Imagine you start a small business selling notebooks. You buy raw materials, pay for labor, and sell the finished product. Each transaction is recorded using debits and credits. At the end of the month, you prepare your financial statements to see how much profit you've made. To really get this down, try some exercises. Record a few transactions and prepare a simple balance sheet or income statement. It's the best way to learn. That's it for today's crash course on accounting basics. Got questions? Drop them in the comments. And if you found this helpful, hit that like button and subscribe for more. Happy accounting!